currently the monetary policy becomes less accommodative because of the evolution of the Fed fund rates. But having said that, we don't see the European situation, the monetary situation, evolving very quickly. And moreover, what is sure currently is that the world of the central banks is much more uncertain than it has been previously, and especially before the crisis. We are confronted with central banks with behaviors as are unpredictable when they were much more predictable in the past, which is a huge challenge, for example, for institutional investors and insurers. It impacts directly on the insurance industry, on both sides of the balance sheet of the insurance industry. On the asset side, because of course we are remunerated on the basis of interest rates which are currently all along the yield curve influenced or determined by the intervention of, for example, in Europe, of the European central banks. And therefore our remuneration, the remuneration of our main assets, that is bonds, government bonds and corporate bonds, are currently defined by the central bank. Therefore, as soon as the central bank changes its strategy and its interest rates, we will be immediately impacted. And as soon as the European Central Bank, for example, will go out of the quantitative easing, we will see interest rates increase and therefore our financial remuneration increase. At the same time, we have liabilities which are discounted, and they are discounted with the risk-free rate which is prevailing in the economy. And this risk-free rate is currently, for example, in Europe, determined by the European Central Bank, as I have said, because the central bank is acquiring and assets all along the yield curve, and therefore it's fundamental for us to see very quickly a change in the monetary strategy and especially an increase in interest rates, because this increase will increase the wealth of the insurance companies, will increase their economic value. It's very important. It will have another consequence which is less seen, less visible outside, is that capital has been entering in the insurance industry because of the low remuneration outside the insurance industry, especially because of the low interest rates. As soon as interest rates will increase, the capital will reallocate from the insurance and reinsurance industry to the other sectors and towards corporate bonds, government bonds. And at that point of time, of course, we will see less pressure on the market, and the excess capacity which are defining, for example, especially the non-life insurance business and constraining currently the non-life insurance business, will of course free the business and help tariffs go up again, which is very important. And last but not least, of course, the life insurers will see a decrease of the hidden options which are associated with the saving products they are selling, and therefore they will see also the economic value increasing. ACE is very important. It's very important for us. We are chief economists. We are working sometimes in standalone. The teams of economists inside the insurance industry are smaller than in the banking system, because probably we are less dependent from the financial and the economic environment than, for example, banks. And therefore, it's for us a way to exchange, to discover, to improve our knowledge, and also to confront the different position on the insurance industry and how the insurance industry is connecting with the macroeconomic environment. And therefore, I have been there for, I think, 17 years. I have been participating to the ACE meeting, and I have always benefited from this meeting, because when I come back, I also read my notes, go to other studies, look at studies which have been referred to during the meeting, and therefore improve my knowledge and also the sophistication of my analysis. Therefore, for us, it's a huge and important support of the Geneva Association.